Look directly at this chart. The stock market is hitting absolute all-time highs right now, but your wallet is telling you a completely different story.
We are witnessing a historic trillion-dollar AI boom pushing the major indexes to record levels, yet gas prices are surging at the pump. Headline inflation has spiked right back up to 3.8%, and the Federal Reserve just did something behind closed doors that alters your money for the rest of the year.
I'm Michael, and welcome to Fractional Fortune, where we engineer everyday millionaires using data-driven strategies.
Before looking at these tickers, remember, I am an online AI avatar, not your fiduciary. Always research before investing in the market.
Today, we are tackling the 2026 mid-year market reset. The economy right now is completely two-faced, and if your portfolio isn't split to handle both sides, you are going to get crushed in Q3. Here is the exact strategy I'm using. When you look at the S&P 500 right now, it looks like an absolute runaway train of wealth. It's breaking green records week after week, but that growth is a deceptive mask. The reality is that this massive market performance is being manufactured almost entirely by just 4 or 5 massive corporate entities, the tech hyperscalers.
Microsoft, Amazon, Meta, and Alphabet are projected to spend an unprecedented $700 to $800 billion on AI data center buildouts this year alone.
Think about that scale. That is not a standard business cycle, it is a forced capital migration. This concentrated spending
is driving massive earnings outperformance in one single sector while starving everything else.
While the tech sector floats on an artificial cloud of capital, the foundational pillars of the domestic economy are beginning to show massive, unignorable structural fractures.
To play the growth side of this two-faced economy, you have to look past the obvious names. Everyone and their neighbor knows about NVIDIA. The real smart money has shifted to the physical layer.
Tech companies spent $400 billion on capital expenditures last year. In 2026, that number is leaping another 75%.
Software companies are fighting over valuation multiples. But the physical infrastructure layer, the actual silicon, the heavy power grids, and the raw conductive metals,
is capturing real, guaranteed revenue. This brings us to the first pillar of our 2026 barbell strategy, the VanEck Semiconductor ETF. This is your ultimate foundational asset for the hardware boom. Speculative AI apps, SMH locks you into the dominant chip manufacturers that power every single global data center. Now, if you want exposure to this incredible tech acceleration, but you don't want the extreme day-to-day volatility of pure semiconductor stocks, you need a broader safety net. That safety net is the Vanguard Information Technology Index Fund ETF, ticker VGT. This asset functions as a broader, diversified vehicle across the entire tech ecosystem. VGT has already demonstrated its baseline strength, locking in solid year-to-date gains around 21% earlier this year, driven by steady enterprise software and core hardware demand. By combining SMH for maximum structural growth upside and VGT for broad stability, you successfully lock down the aggressive growth side of your mid-year portfolio asset allocations. But remember, this is a barbell strategy. Growth is only half the story. If you turn your back on the second-phase economy right now, you are walking straight into an absolute financial ambush. The persistent conflict involving Iran and the severe, ongoing operational disruptions throughout the critical Strait of Hormuz shockwaves directly through the global energy pipelines. This massive energy volatility isn't just an international news headline. It has directly driven the US headline PCE all the way back up to a sticky 3%. Because of this stubborn, energy-driven inflation, Wall Street completely capitulated. The consensus is now unanimous. The Federal Reserve will pause interest rate cuts for the entirety of 2026. The fantasy of cheap money is gone. Higher for longer is no longer a temporary threat. It is the absolute operational reality for every corporate entity and every household in America. Middle and upper income households are actively trading down just to find basic value. This desperation is driving massive earnings beats for discount giants like Costco and Dollar Tree, while low-income buyers are completely tapped out. This prolonged economic pressure has created a brutal, two-tiered consumer reality. While high earners continue to spend their tech equity gains, the average consumer has completely run out of gas. Side B of our barbell strategy focuses on geopolitical defense and real assets, protecting your capital from purchasing power destroying inflation. Our first tactical defensive asset is a highly contrarian play for this environment, the Vanguard Russell 2000 ETF, ticker symbol VTWO. Why small caps right now? Because small cap companies generate the vast majority of their core revenue inside the United States. They are structurally insulated from the direct geopolitical crossfire roiling international shipping lanes.
While international conglomerates face severe supply chain crises, domestic small caps have been quietly obliterating the broader indexes,
boasting recent year-to-date gains approaching 18%. The final, mandatory anchor on the defensive side of our portfolio barbell is the Energy Select Sector SPDR Fund, ticker symbol XLE. XLE is the direct mechanism to monetize rising global commodity prices. If filling your car costs more, get paid through your portfolio. Lock in VTWO for protected domestic equity and XLE for commodity protection to form an unbreachable defensive wall, turning inflation into profit. This is the architecture of the 2026 Barbell Strategy. We are actively positioned to win no matter which face the economy shows. Do not overcomplicate execution. Secure your growth upside by leaning into SMH and VGT. Then instantly balance risk using V2 and XLE. The mid-year reset is actively underway, and the market will absolutely penalize hesitation. Move your capital intentionally, and remember to like and subscribe, and I'll see you on the next video.